Birlasoft has come down because clearly I think within the tier 2 IT category space there are some more pressures, especially on the attrition side. So I think if she wants to switch, I think within the given scenario, I think Mastek and Persistent would be better choices. Persistent definitely could qualify as a better choice if she is looking at a 12 to 18 months time frame. Here the company would gain not only from its offshore business model but even from its product business, and definitely the risk reward definitely looks better as compared to Birlasoft.
Right, this one is coming in from Abhijit, and this one also is for you, Avinash. He wants to know about Avenue Supermart. He wants to know whether it makes sense to buy it at current market price for a long term. He is a long term investor is what he's saying. So it doesn't make sense for now to look at DMart?
I think, Cheryl, the stock has already corrected, from its top by almost 50 to 60%. But if you see the earnings growth engine, I would sense that even as of now, valuations look pretty expensive. And I think despite the fact that now post-COVID activities have become normal, the risk reward is definitely not very, very attractive. So I would believe that, I think this stock is something where I would believe a further correction, if it happens, could be a good entry point. But at the current levels, I think he should not venture out. Yeah, I think as far as healthcare is concerned, I would believe, that considering the kind of business model and the kind of value unlocking which they have done by demerging one of their businesses, definitely it sounds positive for the longer term. But I think as far as the price is concerned, Cheryl, I would be a little hesitant because valuations, based on FY23 still look fairly expensive. So my sense is that, given the choice of entering the stock, I would believe that at least a 10 to 12% correction could be a good entry point. So I think keep on observing the stock. The business is very good, fundamentals are fine, but I think the price point could definitely be better if the investor gets the stock at say 8 to 10% lower levels. Okay. I think, Alex, if she has a long-term view, then I think she should take the opportunity to obviously average once the fourth quarter numbers are out. My sense is that at least for the next 1 or 2 quarters, numbers may not be great because of the headwinds, from the Russia-Ukraine war. I mean, typically crude prices going up, semiconductor chip availability. But I think if you look at FY23, hopefully second half of FY23 the company should do a lot better. And I think since she has purchased the stock at a pretty high level, I think she should obviously use any weakness in the stock to accumulate some more stocks. But yes, keep a time frame of at least 12 to 18 months. I think Tata Motors can definitely bounce back, but I think clearly you need to average out to ensure that your break-even price gets lower.
Jubilant Food works spotted levels of 618. Rahul from Hyderabad wants to know if he can purchase more or should he sell. He's got an investment horizon of about 5 years or more.
I think, Alex, as far as Jubilant Foodwork is concerned, I think this is a story which is well known in the market, and I think the QSR space is now very well competitive. There are many other players which have entered the markets. So my suggestion would be that, if you can look at another companies in this pack, especially Devyani International, which operates in the QSR space and where the risk reward is significantly more than Jubilant Foodworks. It's not that Jubilant Foodworks would not grow, but the risk reward is definitely better positioned for Devyani International. So I think a switch could be, much better for him.